Time for another stock review. This time we're talking Palantir. AI on steroids, literally AI on steroids. And in this video, we're going to cover a full back test of the stock against the S&P, look at the profitability, I'll give you a profitability score, a solvency score, the margins, the profits, the losses, the balance sheet, who's buying on the inside, who's selling on the inside. Give you a full breakdown of this company. Okay, we are talking AI. There's no doubt about it. This is AI on steroids. So let's get straight into our review. If you like this review, please do tap the like button and share it out to your friends. Tap the like. There it is. There's Mr. Mini-Me. Tap the like there and also subscribe and ring the bell so you don't miss any of my news. Well, we've just had, of course, the earnings on Palantir. So we've got a lot to cover on this show. We're going to look at the website. We're going to do a back test on the company. We're going to look at the latest news. We're going to cover all this. We're going to cover all the inside trading, the short trading positions, the whole thing. This is going to be, there's a lot to cover on this video. So sit back, buckle up. It's not going to take 5 minutes. We're going to start nice and simple, but we've got a lot to look into. There's a lot of numbers to crunch. And does this company actually make any money for you, the investor? It's all very well and good, the technology, but does it make money for you, the investor? So let's get straight into it and let's discover, first of all, if you are new to Palantir, what is Palantir? So we're going to start off simple and then get more in depth as we go. So first of all, Palantir Technologies is a holding company which engages in the development of data integration and software solutions. Basically, they come in to your business and make it more efficient, more profitable, more effective using AI. And it literally crosses every business. It operates through commercial and government sectors. And the commercial segment offers services to clients in the private sector. The government segment provides solutions to the United States federal government, and non-US governments. The firm offers automotive, financial compliance, legal intelligence, and what else have we got here? Mergers and acquisition solutions. Its products include Palantir Gotham and Palantir Foundry. The company was founded by Stephen Cohen, Nathan Dale Gettings, Joseph Lonsdale, and Alexander C. Karp, who is the CEO, of course, and Peter Andreas Thiel in 2003 and is headquartered in Denver, Colorado. The listed name is PLTR Palantir. And for those of you that are investors of the stock, I am not, full disclosure, I don't own any shares on anything at all other than the S&P. So I can be completely unbiased and impartial, and my reviews are completely transparent. That's why I get the CEOs to interview me on the show. Sorry, I interview them on the show. Oh, mind you, they probably do interview me as well. Anyway, thank you very much, J2F, for subscribing to my channel. This is made while I'm live. Now then, Alexander Karp, I would like to invite you to be on my show. If you'd like to be on my show, or anyone here invests in PLTR, you've seen that I interview CEOs now, do meet the CEO, reach out to investor relations, contact them through social media, tell them about what I'm doing, and I'd love to have them on the show and hear all about their company. I give a much more open and unbiased conversation than CNBC and Mad Money and all the rest of it. They can come on my show and share their information, and I like to get behind the brain, the man or the woman behind the company. So if anybody here is an investor, please do reach out to them. It's best coming from you. I don't send anybody information at all. I don't try to get people on my show. They come to me by simply seeing my posts and seeing what I'm doing, and the investors ask them to do so. All right, 3,838 employees. Colorado, we talked about that. Now then, if you are using margin to buy this company, it's regarded as low risk as far as margin's concerned. 25 to 100% is the highest, 25 is the lowest. So there we go. It's regarded as lower risk if you are using margin. Market cap 44.8 billion. High today 2185, 52-week high 2185, low today 1932, and 52-week low 719. No dividend, just a growth stock. Average volume, we're looking at 53 million today, just 203 million. Low volume today. That's surprising. Just after the earnings was a great beat, but we'll come on to that in a moment. But anyway, average volume is 53. So good volume stock here. So you can get in and out on the stock. If you get a low float stock, a low volume stock, then you might be stuck in the stock and have to lower the price. With this one, plenty of volume, so you can get in and out if you are trading this stock. Okay, now then. We do have some latest news. We're going to come on to the news in a moment. First of all, I would never use this for rating a company, but Morningstar, I'm going to share their opinions and then I'm going to give my own. With Morningstar, of course, they are sponsored, paid, influenced by their money they get to review stocks. I don't do any of that. I'm completely doing it for free. No one pays me, no one sponsors me to provide my reviews, other than, of course, what I earn on YouTube. All right, but anyway, they say it's a hold, 42%. The bulls are saying Palantir's focus on modular and lead to substantially more commercial clients, which the firm could subsequently. I'm struggling today. I'll tell you why. I burnt the roof of my mouth with some hot food, so I'm struggling getting my words out today. Anyway, subsequently upsell. Subsequently, I can't even say that today. Upsell. The Bears are saying Palantir's executive team has made more questionable strategic decisions in the past. While past performance isn't necessarily indicative of future results, the missteps could merit caution. Fair enough. Most people would agree with that. Okay, smash the like button and subscribe to me if you like this content. So far, we are talking about AI today. We're going to go into much more depth in a minute as I reach out my hand to our AI robot, and it's very exciting. I like this stock. It's something I'm very interested in. Now then, let's move on up now and look at the earnings. As we can see, they've got a very nice earnings history here, consistently growing. Sometimes they've missed on earnings, sometimes they've beaten, but what's good is the company is now cash positive. It's gone from losing money, steadily climbing up, and now we're making money and we're increasing. This looks very, very good. A lot of people think Alex Karp is the new Elon Musk, but don't get too carried away. We're investors here, not gamblers. Okay. Who are we in bed with? Who else buys this stock? So it's worth knowing, because that way it'll give us sentiment of the stock. SoFi, rubbish. Great company. The CEO talks nonsense, though. Has no idea about the structure of the markets. Proved it on many occasions, which means we get a lot of people who like SoFi here, and that's very volatile and all over the place. Neo, don't like Chinese stocks, don't like the manipulation at all. I know we get a manipulation in all stocks, we really do, but the Chinese take it to a whole level. Very, a lot of gamblers in this stock. Nano Dimension, I've never looked at it. Block, I've not looked at it. C3 AI, well, of course, AI again. So people love this. I've made a lot of money on C3 AI. It's very risky though, and AI always gets overbought at the moment. Everyone thinks it's just going to run forever and they'll pay anything for it. PayPal, I'm not so sure about PayPal really, but anyway, nothing too bad in here other than maybe SoFi and Neo, but really I don't know if anything's too bad there. Okay, let's go now and look at the company. So let's find some more information about the company, just to give you an idea of the flavor of this company. What is it? Well, it has contracts with everybody. It does. Anyone can use Palantir, can come into your work and improve the performance of everything you're doing. AI-powered operations for every decision. There it is. Simple as that. Every decision. But just because it's a great company and does a lot of great things, does it make financial sense? Can we make money when we look over the figures? That's what we're doing now. We'll be looking over the figures in a few moments and deciding whether we can actually make any money from this company. All right, so we know a bit about the company, of course. It's getting well publicized. AI, look, in drones, they have a lot to do with the military. Palantir Artificial Intelligence Platform, boot camp information here. Okay, there is Alex Karp. A new age of technology, warfare, and deterrence. Lessons from the war in Ukraine. There you go. A lot of information here. Category defining technology. Palantir ranked #1 vendor in AI data solutions, data science, and machine learning. Okay, now then, let's look at the information that we got from the latest earnings, and then we'll go into the figures itself. Palantir stock jumps 19% as AI demand drives revenue beat. Palantir reported fourth quarter earnings after the bell on Monday. The company's revenue for the quarter increased 20% year over year to $608.4 million. In a letter to shareholders, Palantir CEO Alex Karp said demand for large language models in the US continues to be unrelenting. Okay, but as I say, we are investors, not gamblers. In a moment, we're going to look at the numbers. The shares surged more than 19% in after hours, trading on Monday after the company reported fourth quarter earnings and beat analysis expectations for revenue. Full year guidance for 24 came roughly in line with Wall Street's estimates. Here's how the company did. Earnings per share, 8 cents adjusted versus 8 cents expected by LSEG, formerly known as Refinitiv. I'm struggling because I burnt the roof of my mouth. A revenue, $608.4 million versus $602.4 million expected by LSEG. Revenue in the fourth quarter increased 20%. To $608.4 million from $508.6 million a year earlier. The company reported a net income of $93.4 million or 4 cents per share, compared with $30.9 million or 1 cent per share in the year ago quarter. In a letter to shareholders, Palantir CEO Alex Karp said the company's expansion and growth have never been greater, especially as demand for large language models in the US continues to be unrelenting. Palantir has been rolling out its artificial intelligence platform, or AIP, and Karp said the company carried out nearly 600 pilots with the technology in 2023, up from fewer than 100 in 2022. So there we go. Now then, let's go into the numbers. It's very important to look at the numbers. Obviously, the company's exciting. It's cool. Everyone loves it. We know that Alex is a really cool CEO. The technology's great, but does the company make money? That's what we got to do now. We got to go through the numbers and crunch it all. So let's go through it now as I switch now to my number screen, using the most advanced algorithmic software to come up with our valuations. So here we go. Let's look at the numbers right now. Now, if you've liked this video so far, please do tap the like button and share it out to more people. Leave me your comments below. I will reply to all of my members, answer all your questions, make reviews on all the stocks that you want to hear, and cover all the earnings that you want to cover. Right, now then, intrinsic value. This is very, very important. It's all very well saying that the company's doing well and money's doing well and everything else, but we can't overpay for the stock. We have to have our fingers come together. Do you like the link there? Our hands and minds come together and pay the right price for this stock. So at the moment, it's overvalued by 67%. If we look at the price of the stock today, $6.89 is on a base case. If we say it's worth $8, it's still overvalued by 59%. Worst case scenario, overvalued by 80%. So this stock is very expensive. People are overpaying. However, we need to give you a warning here. Very, very important. Persistent overvaluation detected. Historical valuation indicates the stock market's price has continuously exceeded its intrinsic value. This enduring overvalue may be indicative of market overconfidence or non-fundamental influences explore beyond the financials to understand this valuation discrepancy. People always do, it seems at the moment, overpay for Tesla, and overpay for Palantir. It is too expensive. No matter how much you love this stock, there's no doubt about it. It is too expensive. You are paying too much for this stock. Okay, it's just a matter of fact. Okay, but we love the technology. Let's go into it now and just update ourselves a little bit more on the earnings, and then we'll go into the financials and work out the profitability and solvency of this company. The company ended the year with a bang, reporting a 20% year-over-year increase in fourth quarter revenue, which hit $608 million for 2023. Revenue saw a 17% increase, reaching $2.23 billion, spurred by strong US commercial growth, with the fourth quarter alone growing 70% compared to the previous year, making the company's highest commercial TCV quarter ever at $699 million. US commercial business saw a massive 107% year-over-year increase in TCV, and customer count rose 35% from last year. The commercial segment broke the $1 billion annual revenue milestone with a 20% increase. GAAP GAAP profits painted a similar positive picture with $93 million net income, 15% margin in Q4 and for the fifth consecutive quarter. Looking forward to 2024, the company anticipates robust revenue growth between $2.652 billion and $2.668 billion, a minimum 40% growth in US commercial revenue, a solid adjusted free cash flow between $800 million and $1 billion, looking very, very nice indeed. So that's why people are overpaying for the stock. Now then, look at our revenue. Look at our revenue. It's increasing, $2.1 billion in September of 23, and as you can see, we're up 4% on the most recent range. Operating income is well, thank you very much, Hip Hop Cafe, just for subscribing to my channel. It's $36.4 million, net income $147 million, and free cash flow is up 21%, $490 million, and capital expenditure is starting to improve as well. We're spending less by 46%. That's good to hear. Free cash flow is also up 26%. All right, let's have a look at the balance sheet. Very, very important to look at the balance sheet. Let's go straight into it now. Here we go. $4.2 billion on assets with $1 billion in liabilities, which is great when you consider out of the $4.2 billion in assets, we've got $3.3 billion in cash. So we've got plenty of cash. All right, this is good. $1 billion, no long-term debt. Look at that. No long-term debt, no short-term debt. So we're looking very, very nice. Even though the stock is overbought and everyone's overpaying for it, it's a great balance sheet. And if you believe in this technology, which I certainly do, then it might grow into its stock price. It is overbought right now, no doubt about it. However, what a great balance sheet. Things improving. Gross margins, 80%. Fantastic, but don't get too excited. We have to compare it to the competition. This sort of company will have high margins, as will the competition if there is any competition. So you can't look at it like a car manufacturer who makes 5-10% profit. I know Tesla makes more, but so we have to be aware of that. That sounds great, but what does the competition do? Okay, operating margin 2%, net margin 7%. FCF 22%, ROCE 1%, ROIC 4%, ROA 4%, and ROE 5%, all moving in the right direction. Very, very nice indeed. Look at the solvency score. Doesn't get much better than that. It's up there with Apple and Amazon. 81%. Companies is very, very well funded. Absolutely 100% not going bust for a very long time. Has a very long runway, not going bust, 81%. Margins, the profitability score, 38%. Positive gross profit, that's looking good. Positive free cash flow. Positive revenue growth forecast is only yellow though. Positive 1 year revenue growth is only yellow though. But 38%, still pretty good. But look at that solvency score. You can invest in this company and feel very confident. So far, it is a want to buy. It's just very expensive. However, you might regard it as, well, it's going to continue to grow, so I'll just overpay and let it grow into the stock because I'm just not going to get it cheaper than this. You could look at it like that and assume on the next quarter it's going to do even better and blow up even more, and then the price go up even more, and then your price will start feeling cheap. That is a way of looking at it, most certainly. But anyway, Wall Street, though, do predict a 25% downside. It's too expensive right now. So there you go. 27% upside at the best scenario. Of course, we're not in a perfect situation right now. We've got macro conditions, wars breaking all over the world, high inflation, God knows what else. We're not in a perfect world, but for Palantir, maybe it is a perfect world because they do a lot in that field in the military. 75% downside. It's overbought. It's very expensive. Great company, great future, great balance sheet, but it's overbought when you look at the numbers. Competitive landscape. Now, I'm going to give you a link in a minute. You can go through and compare all of these companies, look at their balance sheets, their outlook, and you decide what is best for you. I'll give you the link in a few moments. All right. Now then, this is a bit of a concern though. Over the last 12 months, you see, they know it. Even Elon Musk was saying once upon a time, stop buying my stock. It's overbought. You're all paying too much money. And nobody listened, and the stock kept going up until it came back down again. So it's a great company, no doubt about it, but you have to crunch your numbers because you are paying too much for this stock right now. So be very, very careful just blindly paying infinite amount of money. Even the company themselves are selling. They're not buying any shares at this level. They are selling. Over the last 12 months, Palantir insiders have not bought any shares, but have sold 190 million. It's really worth knowing that. So there you go. Schiff Alexander sold $79.2 thousand of shares. Just there, Wershing, Eric, he sold $100,000 worth of shares there. So, you know, at the end of the day, guys, it's a great company, but the insiders themselves are selling the shares. So be very, very careful. Now then, let's go on to the short interest. Only 5.39. That is a reasonable amount. It's not going to cause... it's not excessive. It's not going to cause a short squeeze or anything like that. But it needs to be way over 20. The volume was certainly there yesterday, but not there today. But so we don't have enough volume and we don't have enough short interest for a short squeeze. Let's have a look at the latest information just out. So let's cover a little bit of this news here. I'll have a little listen in here as we talk about PLTR. In fact, I will go to this one. Here we go. Let's have a little listen here.
Joining us now is Gil Luria, D.A. Davidson Senior Research Analyst. Gil, want to get your thoughts on what we just got here from Palantir, because particularly on the U.S. commercial side, just trouncing expectations with very strong commentary, and it looks like outlook for 2024 with that growth expected to continue accelerating. Your thoughts?
Yeah, they've definitely cracked the code on how to translate their leadership in AI into the commercial business, starting with the U.S. They've started these AIP boot camps, which is an accelerated pilot to get some of their enterprise customers to figure out how to use AI in their current context with these new generative AI capabilities. And they've been able to do that very rapidly after producing a new product set about a year ago. They're now fully in stride in terms of getting enterprise customers to engage and adapt some of these products early.
Yeah, I wonder what your thoughts are on the fact that we now have a company that, from a GAAP earnings perspective, has been profitable for 5 quarters. They're growing their free cash flow based on, and particularly based on the forecast we have for 2024. And we did get commentary from executives, including Alex Karp, the CEO over there, that basically they're able to do more with less as they take these generative AI and software capabilities that they're offering to commercial and government customers, and they're applying them internally as well. How does that play out in terms of the cost savings and what that does for the profitability of this company?
Yeah, that is a very interesting aspect of adopting AI. This is a company that's led in the application of machine learning for more than 20 years. It's just a year ago that they started incorporating generative AI capabilities. Not only did they produce an external-facing product set for enterprise customers, as we just discussed, they're also using those tools internally, and they've embraced that internally. At the same time, they did what a lot of technology companies did last year, which is start reducing headcount while they were growing by taking it out of places where growth did no longer existed and refocusing it on places where growth was emerging, mostly around generative AI.
Now, I think, Gil, that I heard that Alex Karp, the CEO, told Morgan that the commercial momentum they were experiencing is going to help their government business. You pointed out that government business growth has been lower recently. Does that make sense to you? You have questions about that?
It will take longer. It's harder to take people out of government and put them in a boot camp or an AI boot camp to start embracing new applications. The process for government acquisition is a multi-year process, but they're well on their way. They already led in that regard in terms of building government applications, but this is a multi-year ramp. They're not going to be able to have an inflection point this year. They'll be able to sell one government at a time, one agency at a time, and ramp that up over time. But again, they already go into this as the leading dual-purpose software company for the government. And so they're in a very advantageous position. It's just unlikely that we'll see an inflection point this year in that business.
Palantir shares.
So there we go. That gives you a little idea about it. But like I say, it's going to take more time. And I think people are overpaying for the stock right now. That would be my thoughts on it. Let's look at the last 90 days. 72% positive sentiment. Last 30 days, 75% positive sentiment. And the last 7 days, 83% positive sentiment. And today, 86%. I mean, it's all looking fantastic. But we have to, as investors, not gamble, wait for an opportunity when the insiders themselves are selling the stock. That would concern me. As I say, I don't own the stock. I don't own any stocks. Full disclosure. So I can be open and just transparent. I own the S&P. That's it, to be completely unbiased. Okay, finally, let's look at a back test. Now, if we put $10,000 in, I know it's since just 2021, but it's important to do this. $10,000 in the S&P would now have 13,500. That's in blue. In Palantir, we'd have put 10,000. We now only have 6,800. So you can see it's dropped down. The time probably to buy this company was around about here. This would have been a good time, I think, to have bought the company there. But right now, though, it is expensive, but you might decide it's worth buying anyway, because at the end of the day, it's going to be much, much greater in the future. And there's nothing wrong with that. But I would be just be very careful. I would allocate so much money to it and then have half that money available on a dip. If it doesn't come, it doesn't come. But you can't overpay forever, because at the end of the day, it's like saying, would you pay $10 for a can of Coke? Well, it doesn't make any sense, does it? Anyway, that's my thoughts on Palantir. Do you agree with me? Leave me your thoughts in the comment. Was it a fair review? What do you think? Did we crunch the numbers? Does the money make sense for you? Is it going to make you a return? Are you going to get your money back? Or what do you think? Leave me your thoughts and comments below, and I will reply to all of my members. I'll give you the links up here to all my social media, because I hopefully get an interview from Alex Karp on the show, and I'll post all updated information and everything else for the Meet the CEO series on my socials. Down below in the description also, I'll also post the link of the software that I use. If you like the software that I use, I regard it as the most advanced algorithmic software. It doesn't give you any flounce. It just gives you the numbers as you've seen it. I think it's very effective. I use it all the time for my own investments. So if you'd like that, my members get a free plan. It doesn't cost you anything at all. If you are a member and you want a premium plan, you also, with my membership, get a 10% discount, which makes my membership completely free. Bloomberg and CNBC do not have that deal. I have the best deal, and they will post all my reviews on their website because they're impartial and they're unpaid. And they don't sponsor me to say this. I do it because I use it myself and I just like the software. So there you go. If you'd like any of that stuff, please go and check it out. All the links are below and above my head. And over here, my full list of all my reviews. I've done many, many companies now, and I'm doing more every single day. So if you want a review done like this, I will do it for you. And we rank now for the word stock. So anything with the word stock, Palantir stock, PLTR stock, we rank for on Google and YouTube. So people get to see my reviews. And if it's a positive review, of course, it is good for the stock. But I'm not here to promote or pump the stock, just provide you with the best information. That's why I don't own the stock, so you know it's genuine. Over here are all my reviews. Go and check them out, and above my head and below in the description. Thank you ever so much indeed. I hope you have a wonderful day. Until next time, as always, take care of yourselves and each other.